Hey everyone, hope they're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in there, take a look, see what people are sharing. You'll get my opinion as we go through it. If you want to follow me on Twitter, it's at Finding_Finance. If you want to join our community, finding-value.com, where I dive deeper into all of these topics. I dive into potential investment opportunities. You can follow what I'm doing for this commodity bull market. You can see the cycles and how I read the cycles in terms of yield curve, real estate cycle, a whole bunch of different cycles that we look at. And obviously, we dive deeper into technical analysis. So, starting with Ryan here, Ryan Detrick, he says Friday was a 90-90 day at the New York Stock Exchange. 90% of the stocks were up and 90% of the volume was higher. First since the end of the bear, October 22. So NDR research has data back to 1980 for common operating companies only, so no bond stuff. Bullish returns going out, up 89% of the time a year later, and it is up 14.3% on average. And that's with that 90-90 day. So 90% of the stocks, 90% of the volume higher on that day. There's the S&P log scale, and those are the signal dates. Here, here, you can see where those signal dates are. Obviously, there are some before big crashes as well, but that's the data. You want the data. John Quake says, what's exciting uranium market analysts and commentators the most today and driving uranium mining stocks significantly higher is that Kazatomprom, KAP, telling you that they expect production to remain lower for longer, taking the extraordinary step of making application to Kazakhstan's mining regulators to reduce the permitted production levels in several of their operations with joint venture partner for years to come. So I was more interested in this chart here. It says changes to KAP production profile. And you can see the proposed changes have a much steeper decline here, starting in 2030. So we have a steeper decline. And then you've got 35 at the top here. This is 30 here. So they've lowered the entire chunk here down. It's harder to see that. So we have steeper declines and they're not as high already. Coming back. Mark Berman says you need to take an introductory class in reality at Future Luke. There is no energy transition. It's a political theater Ponzi scheme. Wake up before you're dead. So he's saying, I disagree. France's ambitious renewable energy targets and policies are already showing promising results. And I believe we can achieve a beneficial energy transition with careful planning and investment. And this is what it looks like over the years of fossil fuels dominating that move and wind and solar making up basically nothing. Now, if you listen to people that have really dove into the data, they will tell you in their opinion, that we cannot have an energy transition into wind and solar because the minerals do not exist. The projects for copper and a lot of these other areas, they're not here, and they won't be here for another 10 or 20 years. So how is it possible that we transition if the minerals and the projects are not in the pipeline? Because we can't. And in my opinion, because of those minerals not being in the pipeline, I am betting on fossil fuels over the next 10 years to dominate. I see that as a pretty easy layup, um, especially with the underinvestment that we've gotten in commodities already. So I don't know. To me, it seems fairly obvious, and it doesn't mean that every day will go up. It doesn't mean that every year we go up. We will have cyclical pullbacks in a secular bull market. And I don't think people understand that. They can't comprehend that for some reason. And I'll show you what I mean by the outperformance that we've gotten already. I'll show you it when we get a couple of different things coming up here. So here's floating oil storage is close to 5-year lows. Production is up, but geopolitical risks are high. Energy prices could rise, influencing inflation. But barring that, inflation will be low in August and likely in September as well, says Bill Hamlin. And this is floating storage is approaching zero. I don't know if we've ever had this go that low. I'm not sure in history, but floating storage is incredibly low here. Here's the metals weekly price and performance. We've got aluminum, zinc, lead, silver, tin, nickel, all doing quite well. Manganese and palladium are laggards. Manganese was down, but palladium was basically flat. Everything else was up. We have an all-time high at gold, 25.46 an ounce. Andrew says 9 to 5 jobs with high salaries, benefits, and paid days off are better than owning a business. A low stress job plus investing is all most people need to become a millionaire. Entrepreneurship is great, but your time is worth more than you think. Well, if your time is worth more than you think, then why would you subject yourself to a 9 to 5 job? Who says that opening your own business or owning your own business is going to be more work than doing a 9 to 5 job? It may require more work at the beginning, setting it all up, getting everything, um, basically laying the foundation. But there's a lot of benefits to owning your own business. And I don't know what he defines as high salaries. There's a lot of people and their personality traits that will not do well in a 9 to 5. I am one of those people that does not do that well in a 9 to 5, I don't think, for a lot of positions. There are a lot of people that I know and have met that do incredibly well in 9 to 5 positions. They're more of the military type, the ones that need to be told what to do, how to think. This is what we need to do. Follow this plan and this program and this strategy. Follow, 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 follow. I don't like doing that. So I'd rather spend time, regardless of how much time it is, following something that I can do, that I develop my own plans and strategies. I don't like following other people's plans, especially if I disagree with them. I'll still do it when I was younger, but as I got older, I couldn't take it, guys. That's just myself, and that's kind of where I diverged. It started in my 30s. It is low stress, no doubt about that, for most 9 to 5s. There are benefits too if you start your own company. There are a lot of tax benefits, and there's a lot of things that you can do with retirement savings that you cannot do working at a 9 to 5 job. So even though you may have a high salary at a 9 to 5 position, in a high salary, let's say you make $200,000, I would consider that to be a high salary. You can only put so much into a 401k pre-tax. If you own your own company, you can uh, do things a little bit different. You can open up a self-employed, you can rotate it, move it whichever way you like. You can also pay yourself more pre-tax money because you can go on the employer side if you have an S corp, and you can put in 25% of what you're paying your salary as pre-tax money as an employer contribution. You don't get that with a 9 to 5. And you can obviously do all the employee side stuff as well. You can also deduct a bunch of expenses. So there's a lot of things in your job that may cross over into a business, and you can use them for expenses. Like you can expense a truck, you can expense computer stuff, your internet. There's a lot of things that you can expense as long as they're legal expenses that you can deduct, reducing your total income. But also, you may use some of those things at your house if your business is at your house. So there's a lot of positives to having your own business, and obviously there are some negatives too. Dividend Diplomats, he says, what's the longest you've ever held on to a car? Both my wife and I have had the same car since 2013, 2015. Nothing beats not having a car payment. My wife's car, we purchased that brand new in 2004. Well, actually, she purchased it. I didn't start dating her till 2005. I purchased my car brand new 2005 for $8,700. Chevrolet Avail. We still own both of those cars, and those are the longest ones that we've held on to. I was 24 when I purchased my car at the time. It was my first brand new car that I purchased, and I still own it and use it today. So I'm beating them by about 10 years on their car. Car runs good, and I can fix basically anything on it. And I don't really care to buy anything else as long as it runs okay. If I have to spend a lot of time fixing things, that's when I will eventually give up on it. But right now, I'm okay with fixing what it is. But they are getting towards the end of their life, and one of them is really beat up. Great Marty says Bitcoin update. As mentioned, we can see a backtest of secondary trend line. It's a process, cattle being groomed for the 12th fleecing, in his opinion. Now, I don't just look at these charts and take them for granted. The question I ask myself is why? Why would Bitcoin go down? What is the reasoning? How could this play out? One of the possibilities that this is right is that we are in a big tech bubble and Bitcoin is just an extension of technology. So that could be the case. What are some things where it could be wrong? Well, we've got the dollar dropping like a rock, and this is priced in dollars. So the denominator could fall quite a bit, and Bitcoin could be held up by a falling dollar. I also think that with declining yields, we could see more stimulus enter the market, maybe more loans too, potentially. And maybe we get a move higher and the market isn't as slow and as weak as what we think. So maybe Bitcoin liquidity and the weakening of the dollar um, sends Bitcoin higher. That's a possibility there. Adam Koo says there's always something to worry about. Your success as an investor depends on your ability to ignore the worries of the world long enough to allow your investments to succeed. And these are the reasons to sell. And there's all sorts of stuff of reasons to sell, but you have to hold through it all. And that's from 2009. 2009 to 2021. This is the SPX is the final fifth wave position of the higher degree fifth wave. Once prices reach 5,900, 6,100 targets and remains below exactly 6118, a higher degree crash phase is expected to begin, in his opinion. That is because the fifth wave will terminate the impulse from the 2009 low, likely to retrace that amount of that 15. So we have a big pullback. I do think that this is going to happen. Why do I think that? It's not about the wave count. That is why I think that. It is, it's more about us coming towards the end of this big wave, yes, but it deals with the real estate cycle, inflation, and commodities. It's all switching and swapping around here. So that's why I think it's going to go down. It's at the end of this impulse move and the cycle. And it's the market conditions that are driving it. The wave, this fifth wave, the herd correlates with that thought and that cycle. Here's equities, and nearly every other asset class rallied on Friday because the Federal Reserve Chairman Powell basically promised rate cuts to arrive soon. This will put even more emphasis on will there be a recession debate. As the great chart of Callum Thomas shows, a recession is the ultimate decider on whether rate cuts deserve higher stock markets. And the outlook is mixed. US manufacturing seems to be in a recession, services are weakening, and the SOM rule is flashing red. Yet other recession indicators like personal income, ex-government transfers, and residential investment, which collapsed in early 2022, look less worrisome. In addition, Claudia believes this time may be different. Oh my goodness, not that. All this combined with what happened late July, weak US macro numbers, and early August, the yen carry trade Volmageddon. Geopolitical tensions leads me to believe that if the Fed wants to stay ahead of things, it should cut rates by 50 basis points. What do you think? This is if the econ says medium when the economy does not enter recession within 12 months, it's up about 13%, 14%. If the median, when the economy enters a recession within 12 months, it's down about 15%, 14%. That's the outcome there, depending if we have a weak or a strong economy. History rhymes, so this is the 2007 headline. We all know what happened next. Markets soar after Fed cuts key rate by half a point, September 18, 2007. It fell after that. So they were cutting rates because the economy was weak already. That's your crash scenario. That's the down 14, 15% here. Are we weak or are we strong? What I would do to measure that is if they cut rates, I'd watch housing starts. Housing starts go up and construction employment is up, then we're strong. If those continue to fall, we are weak and we'll probably get a pullback recession. Here's NVIDIA price to sales ratio, LTM versus sales estimates, the three big waves here. And could this potentially go lower? Like lots lower? Yes, that's my guess. That would also correlate with the fifth wave peaking out and heading lower sometime soon. Here's natural gas. He says steep contangos have often marked major bottoms in natural gas. Here we are again at major bottom and then the forward curve, all in alignment for a move higher for natural gas. Coming back up, let me hit refresh. I think one didn't get on here. Maybe I didn't add it. Well, anyway, there was one that said that there was a micro strategy call, and that call is MicroStrategy was the best performing stock since 2020. I just wanted to dispute that. So what I have here, and I pulled up, is this is one of the companies that a lot of us had purchased. It's Crew Energy. It's a natural gas company up in Canada. I'm sharing this because it was like tourmaline. I purchased this back in where the start of this pattern is. I bought it in September of 2020, which is this guy right down here. This is where I purchased a whole bunch of Crew Energy. You can go back and look at some of my YouTube clips of when I was purchasing a lot of these companies and when I opened them up to the public. Some of them, I didn't open up all of them, but I talked about a lot of them. Not every one of my companies was a success, but I have about 10 to 15 companies from 2020 of September where they've gone up over 10x. I'm just using this one as an example. MicroStrategy is this company right here. That's the one that's flicking on and off. Bitcoin is this one here. And everyone's been telling me how Bitcoin has outperformed the other assets. Now, yeah, maybe from this point forward of February 2024, that's probably the case. Maybe, maybe not. This is what it would look like from that period there. So yes, it's gone up quite a bit in the short term. I'm playing the long term from the September 2020, which is that right there. How you put it up. I've got about 10 or 15 companies that are up over 10x since September of 2020 that I've invested in. This one here is an example. It's up 2,087. So 2,087%. Um, so if you had put $10,000 into this, uh, you'd be up 21x roughly. That'd be 210,000. So every 10 grand that you put in, it is now 210,000 for every 10 grand. That's what the return would be since September of 2020. These are the types of returns that I'm looking at, and MicroStrategy has not outperformed a lot, 10 or 15 of the companies that I purchased in 2020 from that time frame. So I have a lot of companies. My biggest returner is up more than even that. It's almost double that, 4,000%, I think, which is like 40 times your money. So 10,000 would have turned into 400,000 if you had invested when I had purchased at that time. So I have a bunch of those in the portfolio. I'm not using this to brag or anything like that. And obviously, not all my companies are like that. But that's what I'm going after for my investments. It's those types of returns. And the way that I did that is using those three pillars that I created. It is a way to identify when something's cheap objectively and then going into it. And I am deploying that right now currently. I think that we have potential investment opportunities in gold and silver. They're very cheap. And I think that the returns can be something similar to this. I don't know the exact time frame, but the entry points are very similar to those of oil and gas back in September, October of 2020. So there's still a lot of opportunity out there. I'm not willing to buy overvalued assets like Nvidia and stuff like that. So I don't play in those waters if they're that overvalued. I look for undervalued companies, and then I look for the chart setups and the patterns. And gold and silver are looking pretty good, and that's where I think future investment opportunities lie. But that's what I've got for today. Thumb up for the content, subscribe to the channel, and thanks for listening. This is Finding Value.